Hi everyone. Thanks for joining us today. We're just waiting for all the speakers to get here. I hope you can hear me. Hi Jemima, can you hear me? Jemima, I sent you an invite, so you just have to accept it. But let me try and do it this way as well. Hang on. Great. You're now
Here I am. I had to turn my mic on. Hi everyone. I'm here now.
Excellent. And can you hear me okay?
Yeah, we can hear you.
Okay, I'm actually in the car on my speakerphone, so I just wanted to make sure that this is working for air conditioning purposes. Andre, are you there? Can you hear me?
Hi, I can hear you fine.
Excellent. So the only person we're missing is Brendan. Claire Jones was going to join us, but I forgot that she's actually on holiday, so she won't be joining us today. But we've got hopefully Brendan Greeley also coming in at any point. So thank you very much for everyone being here. I think we'll just wait a few more minutes, maybe a minute more, just to get some people in. I'm getting a message that my connection is being lost, but hopefully you can still hear me. If for any reason you can't hear me, Jemima is on standby. So, technology, we're getting the hang of this. Okay, so Brendan's not about, but let's kick off anyway. He tends to come in at his own time anyway. So let me just gather my notes. And here we go. So, Andre, first of all, I would love to know if I am pronouncing your name correctly. Is it Andre or Andres or Andre Polish style? Arauz, is that correct?
Yeah, Arauz. Andres is fine, yes.
Andres. Okay, Andres Arauz. So, for those who don't know, Andres is a former Ecuadorian central banker and government official who nearly became president of Ecuador this year. He has been described by some as representing a new generation of leftist Latin American leaders who oppose free market orthodoxy. But critics, especially in our comments on our promo, have also described him as a dangerous loon. I'm sorry to say, I'm just being transparent. What makes him memorably different is that he has come to be closely associated with alternative monetary models, mostly in a bid to help Ecuador regain its monetary sovereignty. So, Andre, thank you so much for joining us today. I'm sure it will be a really fascinating conversation. For those who don't know much about the situation in Ecuador, I thought it might be good to start off with you telling us a little bit about the sort of economic environment you were dealing with when you first joined the central bank, and how it was that you started looking at alternative money systems as far back as then.
Yeah, sure. Well, thanks for the invitation, Isabella and Jemima. It'll be great to talk to you today. Yeah, so basically, Ecuador is a small country with a very large open economy in the sense that it is very dependent on its exports and remittances from abroad, from migrants who left the country after the financial crisis at the end of the 20th century. And right at the end of the 20th century and the beginning of the 21st century, Ecuador's then neoliberal government led by Mawad, who is the same party as the current president, decided to dollarize de jure Ecuador's economy, which basically means adopting the US dollar as the legal tender as the official currency. And that was an important milestone in Ecuador's recent history because it did contribute to reducing inflation. It helped local businesses and consumers to project in time and to have longer expectations in terms of how to plan their future. It was definitely helpful in that manner. But it did create some vulnerabilities on the external sector, especially. For a long time, people would say that Ecuador couldn't have any monetary policy because it was dollarized, but it misunderstood the workings of the economy and the monetary system. When I got to the central bank, we started applying heterodox and post-Keynesian economic principles. And of course, we found that the central bank could be much more active in terms of developing the national economy, playing a role in the credit markets, and also trying to come up with complementary monetary instruments to strengthen Ecuador's economy, but also to keep dollarization, but be it at the same time more flexible, make it more flexible. So that was the time when we got there and we started experimenting with several issues. One of them was using sort of government treasuries as money. So make them electronic and have people trading them and getting paid with them, especially government suppliers. The other one we tried was a B2B, business-to-business invoice clearing system. That was a very neat experiment, but didn't get off the ground because of some legal issues. And then also the mobile money issued by the central bank, which eventually got off the ground, but then was suspended when the government basically succumbed to pressures from the private financial sector. And that's something interesting that perhaps we can discuss.
So that's a really nice starting point. I'm happy to say that I can see Brendan has now joined us, and he's a worthwhile co-host because he's actually working on can I say, Brendan, at this point that you're working on a history of money book? So all these interesting sort of evolutions in Ecuador, I'm sure will be of interest to Brendan. Hi, Brendan, just to check in that you can hear me.
I can hear you fine. If you don't say that I'm working on a history of money book, then my life has no meaning. So please, yes.
I wasn't sure if it was a top secret project yet.
No, it's not. Andres, it's fascinating to hear your sort of brief summary of what you've been doing because, all of these things that seem so exotic, they all have cognates in history. And if we just take them one by one, when you talk about sort of using government debt as a money-like tradable, to me, that sounds exactly like any number of systems. The medieval English system of sharing notched sticks that indicate actually paying out of the treasury. I'm wondering, sort of ideas one by one. Every single one of them has a historical origin. The business-to-business clearing system sounds a lot like the way in colonial America they had silver clear out book credit among them to avoid actually having to transact. So those are just sort of two examples plucked historically that sound a lot like what you're doing. And I'm wondering if you could walk us through sort of where these ideas came from and sort of what you were drawing from when you thought through how to use them now.
Sure. So perhaps I can begin with the government securities as money. We were inspired by the greenback experience during the U.S. Civil War, when the government needed sort of funding for the war effort, and basically started printing these securities that would then became bills, and then just became a legal tender eventually. So we were inspired by the legal sort of by the greenback experience in the U.S. and other cases throughout history. And the interesting part was that in Ecuador, we used the Central Securities Depository and in an instrument that is traditionally available only for brokerage houses or brokers or large banks. We made it through an API with the Internal Revenue Service. We made it actually available for the average citizen and for the average company, so that they could be transacted electronically on the net. So that was a pretty neat effort, and it's still working. It's still working, and governments, when they face a shortage of cash, sort of like California at one point in time started paying with IOUs. It still happens in Ecuador, and it allows for a dynamic market to exist there. So the price differential from par is only about 1 to 2%, and it's basically almost as good as money for the purposes of government suppliers and for procurement issues. Now, the second case, the B2B clearing system.
Can I follow
sure,
up on one aspect of what you were just saying? Did you one of the challenges from government issued money is to get the denominations right. And so when you started thinking about, instead of opening it just to brokerages and financial institutions, to opening it to government contractors and human beings, how did you have to change the denominations of how you issue that debt?
Well, because they were electronic, they were infinitesimal in the denominations, right? So you could there was no problem in terms of the size of the issuance or how you break it up, and that's how we solved it. It was fully electronic. It was a linkage between the Internal Revenue Service and the Central Securities Depository, which in Ecuador functions at the central bank, like in many developing countries. So that's what made it possible.
So you were going to say the B2B one. What was the inspiration for that?
Right. So there's a long tradition of mutual credit systems in Europe, in the barter economies of colonial Latin America, and in general, there's a sort of a long tradition of local exchange trading systems, and we basically got a lot of input from experts from Europe, from the southern cone of Latin America, and we came up with this idea. Actually, a lot of monetary experts from abroad gave us a hand with this, to try to reduce the demand for dollar liquidity from businesses, right? Because if you have accounts payable and the other company has accounts receivable, both of you will eventually have to get a loan from the bank to just go along in your day-to-day operations. But if we are able to clear these accounts payable in a multilateral clearing system, the net demand for liquidity from the banking system would be reduced substantially. And if you are trying to apply the loanable funds, a way of thinking about money, which many banks do in Ecuador, then they would release a lot of liquidity for actually productive loans and productive credit, instead of just commercial credit to finance inventory mismatches and so on. So we based this idea on the local exchange trading systems and mutual credit initiatives that, especially in Europe, have been existing for a long while.
To what degree then has the sort of dollarization of Ecuador been the sort of spark for all this innovation? I mean, and would you say that how bad or good has the dollarization experience been for Ecuador, just to contextualize the situation?
Oh, I mean, I definitely think that it's been an engine of creativity. I wrote a piece once that was titled "Dollarization Demands Creativity, Not Orthodoxy," because if you try to apply, orthodox economic logic to a dollarized regime, you're basically screwed. You have to adjust the economy purely on non-financial variables like the real sector and harming the workers and trying to adjust the real sector variables, and then you have Greece and you have situations like that. So dollarization in Ecuador, especially Ecuador's unilateral dollarization, allows it to be more flexible than, say, for example, the European Euroization, that comes together with an international treaty that has the Maastricht restrictions in it, and sort of curtail the possibility of creativity and innovation within the monetary system. So I definitely think that this has been an engine of creativity, and together with large informal economy, what we call the popular and solidarity economic sector in Ecuador, and complementary money systems are bound to be created, because you just need any type of liquidity to go about life, to survive. So these initiatives, when you have a government and a central bank that is willing to help social innovation, can take place. And this is sort of what is happening right now in the world scene, especially for developing countries. For example, with the SDRs, if we get a chance to talk about those as well.
So what I found, obviously, we I think first met in the fall of 2019, in the sort of wake of the whole Libra, now DM phenomenon, and you were sort of presenting your sort of very alternative view of how money can evolve. And what I found really interesting is that you're quite a champion of sort of sovereign money, and obviously taking control of the money, on a sovereign basis, and that puts you in the sort of CBDC pro camp, as an offset to the sort of privatization side of things, which is represented, I think, by Libra and all the crypto projects out there. Is that a fair assessment? And how is it different for Ecuador, when it considers CBDCs versus, say, the US or the UK? Are there different considerations for sort of sovereigns that are in already a dollarized system relative to, say, the UK or America?
Right. So ultimate monetary sovereignty is having your own unit of account, and from there on, all of the monetary instruments that can be derived. In the case of Ecuador, we are dollarized, and in very realistic and pragmatic terms, it has been a fortunate decision with a lot of lucky elements in it, incorporating the 20 years of dollar depreciation and a large amount of remittances from abroad that have kept it going. Also, the rise in the price of oil. But given the fact that the dollar is the world's reserve currency, the world's currency really, and the fact that it's a monetary anchor for the rest of the currencies around the world. When I think of monetary sovereignty for dollarized countries, I'm talking more about the money things and the money instruments, and the possibility of reducing the exogenous needs of liquidity, and trying to have as much endogenous money as possible, while preserving the balance of payments equilibria and so on. Not necessarily about changing the unit of account, right? That's not what at least I think should be done, or can be done really, in terms of monetary sovereignty. But I think that there is plenty of flexibility that is unused. Basically because of dogmas that limit the people's ability to think and propose alternatives and new ideas. And of course, if Brendan is writing a history of money, he will tell us, how there are plenty of alternatives available, and money is not just, the bank-dominated narrative of supposed exogenous money. So I think that monetary sovereignty is plenty useful for being creative about this, and to trying to solve real people's problems.
Andres, it's amazing to listen to you talk. I'm actually, unfortunately, not even writing a history of money. I'm writing a history of literally the dollar. I've been quiet for the last couple seconds because my neighbor is rebuilding a muscle car, and he has been revving it next to my ear as we talk. But I'm want to make sure that I've understood correctly what you're saying, because I think it's fascinating, which is do I have been struggling to find a good definition of monetary sovereignty. And the best I've been able to figure out is that nobody really agrees on what it is. It's very hand wavy. We sort of all pretend we know what sovereignty is, but nobody can measure it with any precision. And it sounds like what you're saying is it is completely possible to be both dollarized and sovereign.
I think you can be. I think there are many ways in which you can do that, because one of the things that I'm writing about is the Xeno dollar, which I know Isabella has pushed that term before. It's I think more generic, etymologically correct term for referring to the euro dollar or the offshore dollar. But in dollarized countries and really in dollarized banking systems, you can issue dollar-denominated money instruments via credit, via loans, via other types of assets and liabilities, but still, work outside of the U.S. dollar jurisdiction, the U.S. government jurisdiction. And you can build institutions and regulations for working with a foreign or a Xeno unit of account, but within your domestic, government, fiscal policy, insurance policy, deposit insurance, lender of last resort instruments, as long as you keep a check on your balance of payments. So, for basically all countries in the world, save reserve issuing currency issuing countries, you need to anyway to keep a check on your balance of payments. So I think that monetary sovereignty, balance of payments, and money instruments are related there. I can't think of a working definition right away, but I think all of these elements are involved.
I think it's what you're talking about is very similar to the process. So I think of two rounds of dollarization. The first one started in the early 16th century and ran possibly to the end of the 19th century, where the dollar was a big silver stable coin. And it was basically the same size and shape, no matter who issued it, for 300 years, possibly 400. We could sort of define the end of that dollar zone. And then there's the next round of dollarization, which came, when we started to assume that the reserve currency, the base unit of money, was the dollar reserve held at the Federal Reserve. Everything that you're talking about, to me, sounds very familiar to the first round of dollarization, when you had these big, full-weight, standardized silver coins, most of them from Spain, moving around the world, and the flow was basically from the Andes to China, and it stopped many places along the way, but ultimately China was the dollar sink. The money was produced in the Andes and it was sunk in China. And everybody along the way had to decide how they were going to handle the fact that they could not control that the merchant's unit of account was this big silver coin. And right now I'm studying how the province of Maryland, this was even before the founding of the United States of America, one of the states, dealt with dollarization. And they created, again, these terms are slippery, they had this exogenous money, or money that they couldn't control, which was the silver dollar that was trickling into their economy from Pennsylvania and from things that they would sell to the West Indies. They couldn't control it, but it was part of their economy. And they basically decided as a province that they were going to, not privately, but through the assembly, create endogenous paper dollars. And they backed those dollars by creating a sinking fund, and they would assess taxes on exported tobacco, and take those taxes that were denominated in sterling, invest them in Bank of England stock, so that they had something that was growing over time that could buy back those dollars. And so when you look at, if you compare all of the US state economies and eventually what became the United States that was thoroughly dollarized, and China, which was also thoroughly dollarized, China did not have an elegant and graceful end to its dollarized silver economy in the early 20th century. The United States did exit from that. And I suspect that the way they exited from that was they had exactly what you're describing for Ecuador, which is a much better, flexible, robust system of creating their own various kinds of endogenous flexible paper dollars that were much more useful locally than the silver ones that were all headed to China anyway that they couldn't control. And again, it comes down to, it seems to me like the way you're approaching this is, we tend to think of dollarization as a bad thing. And the Federal Reserve and the IMF want to reach out country by country and say, okay, we're sorry about the dollarization. What can we do to make you help? And it sounds like that there's a change in mindset that's important, which is dollarization is happening. We cannot stop it. What is the best way we can respond to it rather than attempting to stop it? Is that right?
Yeah, I'm a realist in that sense, and I think sure. I mean, national governments do try to keep their unit of account because it fulfills a purpose to them. But it is only about a year ago that we heard even the president of Venezuela, Nicolás Maduro, saying, "Thank God for dollarization," because that's what it allowed people to continue paying their daily living necessities with. So I think that it's a reality. It's a reality like the gold standard was before, and even when there was the gold standard, didn't mean that all of the countries. I mean, sure, in nominal terms, they were on parity with the gold, or then with the with the dollar gold standard. But of course, within the domestic economic system, there was always some creation going on, some endogenous levels of creation happening. So, I think that in historic terms, we have to come to terms that there is a monetary anchor and try to work within it. Now, the thing is, we have to be able to overcome the dogmas that sort of stifle and try to repress innovation, creativity, experimentation, and the possibility of creating solutions for people that are outside of the bank-dominated narrative and their basically exclusive prerogative to create money. It really is a political economy issue as well.
This seems like a good time to ask you the question I'm sure everybody probably wants to ask you, which is, what are your thoughts then on El Salvador's move to make Bitcoin legal tender in that context?
Well, to be honest, I always thought that the intention was not really about Bitcoin and imposing another foreign unit of account or sort of a foreign money onto the population. But the real intention was probably to replicate what we tried to do in Ecuador, which was basically a domestic wallet system for creating a atomized payment system so that Salvadorian citizens and Salvadorian businesses could clear their domestic obligations and their transactions with the Zeno dollar, with the domestic dollar, without requiring plane loads of U.S. dollar coins and notes brought over from Miami to clear domestic transactions. So I think the real intention is the Chivo wallet, which is the government promoted or government sponsored wallet that's trying to be pushed onto the Salvadorian people. And I think that will, of course, give the Central Bank of El Salvador and the government of El Salvador some more flexibility on the balance of payment side that will allow the central bank to accumulate more reserves and to be able to finance a few more imports for its expensive fiscal policies. I think that part is a shrewd move. I'm not so sure about the whole Bitcoin narrative, but I understand how it could have been used to try to get a fad going or something like that to push for the wallet.
I see. So it's more of a means to an end. I mean, you mentioned, in your email to me before this chat that there is some possibility that there's also going to be a CBDC evolution from that. Tell me more about what was being hinted there.
Oh yeah, I'm sure that will happen pretty soon. President Bukele's brothers have been meeting with some providers of fintech technology abroad and exploring the possibility of issuing a sort of domestic dollar instrument with the Chiva wallet, and they never have to call it that. All they have to say is that they're dollars and that they're being traded among Salvadorian people for the purposes of day-to-day business. The Bitcoin is sort of hovering on top of the discussion, but really it would allow for people to trade in electronic dollars instead of the coins and notes. The coins and notes would then be sort of progressively and slowly enter the financial system, and they would become central bank reserves eventually, and it would allow the government to have a bit more liquidity for international transactions. So I think the CBDC experiment is really what's really happening in El Salvador, and it's logical because the government requires that type of payment system policy as a replacement of the lack of, at least nominally speaking, monetary policy that the Salvadorian central bank can apply. But what really worries me is what happens if the Fed coin or the U.S. CBDC happens out of the blue for developing countries. I always have sort of this perspective from the South and working with the concepts of international money hierarchy. But can you imagine if all of a sudden the U.S. issues, the Fed coin, and any citizen, not only U.S. citizens, but anyone in the world can have an account at the Fed or can buy CBDCs issued by the U.S. government? That could be creating serious problems for the balance of payments of countries in the South. I mean, it would have never been so easy to have basically an offshore dollar account with deposit insurance and with the guarantees of the U.S. government. I mean, countries in the South have to think about this seriously. And likewise, for DM and Facebook's currency as well, it can create sort of an offshoreization of the money systems of countries in the South.
I mean, I find that fascinating because certainly, when I speak to the BIS or the sort of central banking community, the push towards CBDCs is definitely coming from the sort of, we've got to do this because China's doing it and because Libra's doing it, and we couldn't possibly, find ourselves in a situation where we don't do it and then everybody starts using the EU1, right? But of course, I contend that doesn't really make sense because there's, who really wants to use the EU1 when you don't trust the government of China necessarily to be, scrupulous with your data, because this becomes a personal data story at that point, right? So then it's about which government do you trust most with your personal data. So I think it's really interesting what you're saying, because they also then contend that, the reason they need to do this is to create a public good. It has to be universal, to bank everybody, to avoid the unbanked situation. But then if they're platforming everybody and you can't deplatform anyone, as you say, where is the boundary? Like, who gets to have a Fed coin account and who doesn't? How does that then transcend, into sanctions, and if you're sanctioning people, or at what point, where is the line, and if you can use it on foreign individuals, how can you then use it domestically, and how can we be, these are the questions that come into my mind, and whether or not it's also a pathway to a kind of sneaky social credit system in some other ways. What do you think? I mean, that was a really big sort of grandiose thing I just said, but any thoughts on that being a risk?
Yeah, I mean, I think that we have to do away with the world of unilateral sanctions. I think that restricting people from access to payment systems is not good, especially not entire countries, and especially not or for unilateral geopolitical reasons. So I think in general that sanctions should be done away with, and weaponization of dollar hegemony and of U.S. bank hegemony it should be done away with to begin with. And I think now, of course, I'm asking for something that is probably geopolitically very complex and has many dimensions to it, and many Bitcoin users and cryptocurrencies such as Monero and Zcash and so on are very conscious about this and try to say, look, we are a sanction-free environment or society, and that I think a good interesting part of that. But I think the technology standards that some of those instruments use, like zero knowledge proof, can be adopted by CBDCs, so that even if they are account-based, they don't have to have the entire data of a person or of a company so that it can be used. I think zero knowledge proof systems are perfectly adequate to give enough privacy for users, and at the same time give information that is useful for monetary policy purposes. So I really think that we as society should push for more, for wider adoption of the ZKP standards.
Just to interrupt on a housekeeping basis, so we've got, hopefully we can keep talking with you for up until 5 o'clock UK time.
Yeah.
I managed to double book I didn't manage to, it just so happens that my nursery double booked me because my daughter's graduation day was determined to be today. So I would love it if anyone has any questions, because what I'm going to do is I'm going to pass on the questions to Brendan and Jemima at this point. As I nip out, I'm so sorry, this is so unprofessional of me, but it's to get a cute picture of my daughter graduating. So if you have questions, because I'm the host, I need to bring you into the room at this point so that Jemima and Brendan can then feed them through. So if you have questions, raise your hand, I'll bring you in, and in about 5 minutes, I'm going to pop off, and Brendan and Jemima will take over, if that's okay. Over to you. It was just a request for questions. Put your hands up now. Brendan or Jemima, you were about to say something, I think.
I was just going to ask, I mean, I'm not a... Hi, Andres. I don't think I've said hello yet.
Hi.
Hello. I'm not an expert like Brendan or even Izzy, but so just so that I'm understanding you correctly, you're suggesting that you seem to be concerned about the US kind of coming out with a central bank digital currency ahead of others, and the risk that suddenly everyone has an account at the Federal Reserve, kind of this Fed coin. But are you implying that by that somehow like emerging market countries could somehow like get ahead of that? And why would someone not still want to have Fed coin when that comes out? And is that, this is a bit of a double question, but is there a risk as well that that the kind of digital dollar is no longer a kind of fungible thing, and that like the Fed coin is actually seen as more valuable and more kind of creditworthy somehow than like the Ecuadorian digital dollar? Is that, do you see what I mean? Those are kind of two questions, but I'm not sure if I'm understanding what you're saying correctly.
Right. My worry is about capital flight, if you want to put it bluntly, right? So if right now, basically Latin American and African elites can open offshore accounts in tax havens, and then eventually that money flows into Delaware companies and U.S. accounts. Now, just by creating your CBDC account at the Fed, if it is eventually issued, it would be extremely easy, not only for the elite, but perhaps for the middle class and from people who are in developing countries that have issues with the macroeconomic stability, which is basically the entire world, to get U.S. accounts in a much more direct fashion, and then be able to transact with them in a 24/7 basis. It would create massive capital flight from developing countries to the north, to the U.S., and that would, of course, be something that is very, very difficult to manage for the South. And we don't even have to wait for the Fed coin or the Fed CBDC to be issued, which may take a couple of years. But I'm talking about a couple of weeks type phenomena when DM is finally uncovered and issued and deployed around the world.
Right.
Especially if it's if Facebook's DM is deployed within the WhatsApp interface. I mean, WhatsApp is probably the most used app in developing countries around the world, and if like it happened in Brazil or in India, where you incorporate the payment dimension to it with Facebook's liabilities, with the DM liability issued by Facebook, I mean, then we are going to start having some major issues of capital flight in developing countries, and I think developing countries have to be very conscious of this and start, preempting with regulation, demanding, Facebook DM and WhatsApp to have, domestic correspondent banks and sort of regulate those flows very, very soon.
I'm not sure what the motivation would be for someone to use a digital only private currency like DM when they could just, I mean, you used India and WhatsApp as an example. I mean, WhatsApp Pay has already been rolled out in India, and it kind of competes with companies like Paytm, but that's just using regular currency. That's not using a digital own. I'm not sure why people would suddenly flock to a digital only currency run by a private company when they can already do so. They can already transact with digital central bank currency. But just coming back to my question, are you suggesting, so maybe you're not, but are you saying that, so I get your worry about capital flight in the event of kind of FedCoin and when DM finally, if and when DM finally launches. But what I'm saying is your idea, therefore, that emerging market economies need to develop their own CBDCs to kind of prevent that from happening. And my question then is, why would that? Like, just because Ecuador has implemented its own CBDC, why would that still stop someone from going directly to FedCoin if they see that as a kind of superior version?
Right. So to begin with the India case, India is actually a case where the Indian government did regulate how WhatsApp should interact. And instead of moving about, Facebook credits or Facebook DM or whatever, they created the unified payment interface, which is sort of the government-owned clearing and payment system onto which all of the payment providers connect to. So that's the kind of thing that we should be seeing in the rest of the developing countries. But of course, not nearly all of them have the same capacity as the Indian government. The second question is about, why would you switch from a domestic dollar or a Zeno dollar to, the Fed coin or a foreign denominated instrument? And the answer is the same one as why, elites basically prefer to have their deposits in offshore accounts rather than in domestic accounts. Sure, I mean, if you ask them, they will nominally say because, they don't trust the society, domestic societies and governments, are always after them and so on, and political persecution. But really, it's because of tax evasion and, added levels of opacity and the possibility to move that money around from place to place without, the government tax-oriented surveillance. And that raises the question as to, for example, the interoperability between CBDCs, for example, right?
Right.
And just recently, earlier this month, we saw an experiment between the Banque de France, the Central Bank of France, and the Monetary Authority of Singapore, where they did a transaction with their CBDCs, but instead of coming up with some sort of mutual recognition system, they put themselves hierarchically below JP Morgan's Onyx blockchain with
Wow.
JP Morgan correspondent account. So I'm seeing there that we're starting to see some of these paradoxes there, where central banks are basically subordinating themselves to these large mega banks in terms of the international transactions and the possibility of CBDC interaction.
Andres,
Wow.
when we think about when the Fed thinks about its international obligations to the global dollar system, it's like a mandate that dare not speak its name. The Fed is authorized by Congress to do basic interventions in the domestic economy, and as far as the international economy, they understand that they have obligations there, but they're kind of making it up as they go along. When right after Libra, when I did some reporting about sort of the possibility of a digital dollar, one thing that was consistently brought up is the Fed is wary that it will hasten dollarization, and they don't want that. They sense some kind of responsibility there globally. At the same time, at the beginning of the pandemic, one of the things the Fed did was contact a much wider circle of central banks that they don't normally have swaps with, and offer dollar swaps so that those central banks in turn could auction off those dollars to their commercial banks. So on the one hand, they're cautious about dollarization, and on the other hand, they're sort of sending a signal to the commercial banks globally. If we have to avoid a crisis, we will find a way to work with your central bank to keep you liquid in dollars. And so what, from your perspective, what would you ask of the Fed? What should the Fed be doing to make sure that the sovereignty you've carved out within the global dollar system isn't in any way compromised by the Fed's next move?
Right. So the thing you mentioned, the swap network that the Fed has developed with multiple central banks, I have to emphasize that this is, with very few central banks. Even in the pandemic, it was only about 18 central banks, and they, in total, only about 17% of the population lives where those central banks operate. So basically, 4/5 of the world's population is excluded from this sort of Fed lender of last resort with swaps mechanism that was developed earlier on and has been used since the 90s and earlier, but has been widely used last year when the worst part of the pandemic hit the system. And this is actually what made me send a piece to Alphaville a year and a few months ago, when I said, look, if the Fed isn't going to open their swap network to everybody and start applying geopolitical terms in the worst part of a global health emergency, then we need something else. And what we need is the SDRs. We need the special drawing rights issued by the IMF right away. We need those right away because that's the possibility of liquidity available for central banks abroad, and have those central banks use those SDRs to finance at first, to cushion and as buffers as part of the downturn caused by the pandemic. And now, of course, since it's taken so long, and now they have to be used as part of the recovery efforts and basically the health emergency as well. And this is where the issue of the health emergency and sort of the geopolitics of the health come together with the monetary part. And if I just take 1 minute, I want to explain how the vaccine apartheid is creating a new monetary crisis. Look, the countries of the richer countries basically have been able to get their hands on vaccines, vast amounts of vaccines, that cover many times the population, and the countries in the South haven't, and basically are struggling to get vaccines on hand, and many shortages and supply issues and so forth. So there's an issue of level, there's an issue of speed, and how that relates to economic recovery. So basically, Kristalina Georgieva last week, the director of the IMF, said, look, rich countries are recovering at a much faster speed and also at a higher level, while poorer countries of the South are recovering much, much more slowly. They're doing it slowly and coming from a lower level. So here's the thing. Now we're starting to hear voices that say, the Fed should start raising interest rates to avoid overheating, and the same from other rich countries or central banks in rich countries. But if interest rates are raised in the middle of a possible intent of recovery in the countries of the South, we're going to have a repeat of the, debt crisis of the 1980s that the developing world suffered. So I think that the Fed and the rich central banks have to have in consideration the situation that the poor countries are in, especially because of vaccine apartheid.
I mean, for the Fed to be explicit about that, it would take Congress recognizing the dollar's global role. And I just don't see any motion there at all. There's not even a hint of a discussion. There's only the barest beginning of a discussion of thinking creatively about domestic money in the United States. I mean, everything you're saying makes absolute sense. And I also worry about it because the level of denial publicly by both Congress and the Fed about the dollar's international role is huge. Now, they do feel some responsibility about it. You can see that from their actions, but it's never anything that it's so rare that they ever openly talk about it. So everything you're saying makes sense, and I don't know how or where it's going to come from, because I guarantee you 0 humans in Congress are talking about this.
Yeah, I mean, there are a few representatives who are talking about the SDRs, and I think that's already a big step forward, considering that it's a very exotic instrument, and very few people know about it, and very few governments even know about it, even though they're going to get billions worth of it in the next few weeks. And I think that the fact that some members of U.S. Congress are discussing SDRs and pushing for SDRs and civil society initiatives for SDRs, I think that there's the possibility of an opening there in the discussion, and we have to continue pushing for that. I mean, the IMF finally, with the Biden administration, received the approval to issue $650 billion worth of SDRs. I think it should have been more, at least $2 trillion. But, at least with the chunk that goes to developing countries, which is only about a third to a half of that, it will still, be a helping hand in this situation. The thing is, the narrative around SDRs is now that they're only sort of reserve assets, right? So only central banks can use them, and they go to basically central bank equity, and they're there to improve the solvency of central banks. But that's not helpful to anybody in real life terms. They have to go to government budgets, and many governments are being sort of bullied by the hegemonic powers and the financial system into saying, you shouldn't use SDRs for government purposes, for fiscal purposes. You should only use them for monetary purposes. And I think that governments need some help in trying to make SDRs work for people, in the sense of, the health emergency, economic recovery, necessary investment in climate emergency as well. And I think that we have been also successful at doing that. When the 2009 SDR issuance occurred, Ecuador, I think, was the only country to be able to pass on the SDRs to the national government to be used as part of the budget. And this is what has to be done in this case as well. This is fully compliant with IMF articles of the agreement. We just need some of the technical details to help governments navigate through that.
Go ahead, Jemima.
I was just going to say, if anyone has any questions, we've got about 5 or so minutes left. So raise your hands, and Izzy will respond. I also wanted, Brendan, can I just,
please,
to lower the tone a little. I'm sure everyone, it's Friday afternoon. We need a bit of lower 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 tone stuff. Andres, you talked earlier about the use of Bitcoin in El Salvador being a fad. Is that your kind of view of crypto more broadly? I mean, how do you view crypto, Bitcoin in particular? Do you think that, I mean, how much value do you think should be? I mean, you know, Bitcoin, crypto people claim that their industry is $1 trillion industry because that's how much, you know, their supposed market cap is worth. But I mean, what's your view on the kind of value of cryptocurrencies, and is there any kind of future for them in any kind of dystopian or other world?
Right. So as I mentioned earlier, I think they do have value. I think Bitcoin is a capacity of being basically an accounting system that's outside of the bank's ledgers is a huge innovation in terms of money. At least in contemporary money forms, and the possibility of making cross-border transactions without the correspondent banking system in the middle is definitely something huge. I'm not so sure it's big in terms of the domestic payment systems. Probably more of a hassle than anything. I don't like the fact that now it's more than cryptocurrencies, they've become crypto assets. Sort of instruments of speculation. I'm not sure that was what was originally intended to happen with the Bitcoin design. But I do like the fact that it spurs creativity and that it has helped, for the discussion on money to happen. You know, in the last few years, now people are asking themselves, what is money? And that question is very important in the modern society, in the monetary capitalist production economy. You need to ask yourself, what is money? How do I get it? Where does it come from? And it's helped a lot in that sense. And that's why I also like the CBDC discussion, because even if, we don't get there where, procure CBDCs all over the world, just a discussion on the roles of central banks and the relationship between central banks and society and normal citizens does open the discussion on what central banks are, who's managing them, who has the power within them. And I think it does open the possibility of the democratization of central banks. So the discussion in itself, I think, has a purpose. Yeah.
Okay. Go on, Brendan. Yeah.
Oh, Andres, it sounds like what you're offering is a different manual for how to respond to dollarization. And if I think about how the IMF handles it on a country-by-country basis, their advice seems to be avoid it if you can. If you can't, the conversion happens at the border. You can let your domestic states, your national government, even your domestic corporates borrow in dollars internationally, and then they spend in the local currency. And that creates imbalances at illiquid moments that blow up. So that system doesn't seem to be working very well. Is there a way for you to summarize, what's the 2-minute version of, don't do what the IMF says, do this instead. Here is how, if your eyes are wide open and you see that dollarization is happening and you embrace it, then do what?
Right. That's a complex question, but I'm very skeptical of the IMF because, sure, they tend to recommend against de-dollarization. They recommend against dollarization of the financial system, usually, more recently especially, not so much in the 90s. They actually pushed for that at the time with the capital account liberalization policies and so on. But I'm a skeptic because they don't have a coherent framework for dealing with dollarization and global dollarization. The IMF should start working within the framework of international money hierarchy and of money hierarchy in general. I mean, last time I just recently saw an IMF paper on the role of the US dollar as a reserve currency and the relationship to balance of payment. They just added a dummy variable for the US saying that, it's a reserve issuing country. Like, if you could simplify all of the complex issues that we've been talking about just with a dummy variable, when they really do not discuss the fact that it's a pyramid, it's a hierarchical system, and the US is on the top, and the Fed is right at the top, and you have the Fed wire, that's the most important payment system in the world, and how this the hegemony of the dollar in the last year. Can you imagine the world without the swaps last year? I mean, it could have been an entire shock to the monetary system. So I really do think that the IMF has huge problems in terms of how they structure the understanding of the domestic and international economy, because they do not work from an international money hierarchy perspective, and they still think money is exogenous, unfortunately.
Hi there, I'm back, by the way. But I have a child in the car now, so excuse if you can hear that. By the way, people who put up their hands and requested questions, I did add you as speakers. I don't know why it hasn't managed to work. So if you're desperate to ask a question, try one more time. I am adding you. I don't know why it's not coming up. It's obviously some sort of technological glitch. If somebody just wants to put their hand up and do a request just to make sure that I know what I'm doing, you don't have to actually ask a question. Feel free to do that as well. That's all I wanted to say. I'm muting myself now because the little one was giving. Well, there you go. Hang on.
Hi, Andres. I'm not sure if we're waiting for questions or what we're doing, but
Well, there were 3 people who put up their hands.
Oh gosh, that's a lovely child.
But for some reason it didn't work through. So I'm just going to assume nobody has any questions unless I see in the next sort of 2 or 3 minutes. But I think we've come to time anyway. It's been an absolutely fascinating conversation. My daughter is unfortunately now a massive distraction. I want to just explain. I didn't schedule it like this. Just the nursery just decided to spring these events on you at the last minute. So I apologise for that.
Okay.
Brendan, I'm going to pass it over to you. I haven't got any requests at this point.
Okay, sure. I think Brendan's phone has died, so everything's going wrong, and perhaps sending us a sign that that we should kind of wrap.
There is one speaker.
Oh, we've got a speaker.
Hang on, a question, Robert. Sankapal, I've got you. I've added you. There you go.
Go ahead.
Actually, in 1990s, when the globalization has been started, the GATT and Dunkel agreement has been formed that will say that the peoples can access numerous options in the product choose arena. But thing is that due to that globalization context, the domestic industry has been much more weaker compared with international and transnational companies. So how it is to be possible to revive the domestic economy through the financial assistance or financial pump into the system in domestic economy? If you please clarify on that matter.
Sure, with pleasure. Well, I think this is something that came up in the Ecuadorian campaign earlier this year, and it was exactly the discussion. How do you help the economy to recover? In a world of the WTO regime with very open economies and with an open capital account, and where 2/3 of the production and trade in the world are basically managed by these mega transnational corporations. And I think the part of the answer definitely means improving the internal market dynamics, having a society that has more purchasing power, and designing instruments, both in terms of the money instrument itself and the policies that accompany those instruments, to try to make sure that the circuits of the consumption are related to the domestic production. So basically, if you choose a small town in, say, rural Ecuador, if you are able to provide financial instruments that are in turn working with a domestic savings and loans cooperative that will give credit to the growers of the people who grow food within that rural area, then you will have a possibility of creating a sort of endogenous economic growth within a specific region. Sure, this does not ignore, export-oriented economies, but if everybody's going to export their way out, then who's going to be the importer of those goods? Yeah, I mean, these have to work together, and there are many ways of doing that. In the Ecuadorian campaign atmosphere, we basically pushed for emergency $1,000 grant to the poorest 1 million families so that they could spend it in the domestic economy. And all studies show that the poorer you are, the higher the relative amount you buy in domestic products is higher. So that was the underlying principle.
Andres, thank you so much. I think that was the only question we had. We're a bit over our hour anyway, so I should probably wrap this up. I actually had one final question away from kind of the discussions that we've been having. You very, very nearly became president of Ecuador earlier this year. I think the final vote 44, very familiar for the UK, 48-52 in the end. Yeah. Very, very familiar to us. Might we be speaking to a future president? Would you consider running again? Give us the scoop.
Well, that's a good question. Right now, I'm focused on my academic writings and getting through with my PhD in Mexico at the UNAM.
Mm-hmm.
I'm also working with other governments in the world to trying to help them through the post-pandemic economic recovery, and also working on progressivism in the international progressive arena, especially in Latin America. And I guess the answer is time will tell. I did not get started. I'm there to work for the people. Those are my motivations, but in the short term, it's not on my mind.
Okay, thank you. Well, thank you so much. This has been a really fascinating discussion. I've learnt a lot. As I say, Brendan's phone ran out of battery, but he wanted to say that he was in awe of of your realism and creativity, and that he wants to interview you for his book. So I'm sure he'll be in touch. But thank you so much to everyone for listening.
Thank you.
And to you for this.
And thank you from me as well.
And from Izzy, who's now going to
really, it's a nice discussion we have, and really some information we gathered. But one question still unanswered, that is, if you see in a global economic context, that we can find it out that merger and acquisition could be a much more speedier space, and it will affect the domestic industry as well as it affect the employment situation. Is that only reason that merger and acquisition is the much more playing a spoiler role in a global market economy? What is